Friday, November 17th. Today, as usual, we're going to take a look at where we closed for the week with the broader markets and also beyond. You want to be aware of rotation, money flows that are shaping up into newer areas, which is great news as the markets continue to broaden out. Also, some of the news that drove price action last week, and this news will also help the markets going forward into next week as well. Last up is viewer question of the week. And it's all about an easy screen that can help you get in front of these names that have proven to really begin to carry on beyond just a one-day move. So we'll get into that as well. So here we are with some of the news from last week, and certainly very impactful inflation data came out. October core CPI, consumer price index, came in below estimates. Great news as it relates to the Federal Reserve's monetary policy. More investors are continuing to speculate that the Fed's rate hike campaign could come to a close. We also did see producer price fall last week, and it was October numbers. Also good news for the markets because in turn, interest rates are continuing to pull back, and this is a great backdrop for the markets. Retail sales fell for the first time in 7 months, and as usual, negative or not positive economic reports are good for the markets. The Federal Reserve wants the economy to cool off, and this drop in retail sales is in the right direction. However, we did see a nice move in some of these retailers that I'll share with you as we move forward. Also, mortgage demand did jump after interest rates dropped this past week. And next week, we do have Federal Reserve meeting notes that are due to be released, leading indicator numbers, and then flash PMI data. This past week, we did have mixed home building information come out with confidence dropping, but housing starts and building permits did go up. Overall, home builders did fare well last week in the face of a lowering interest rate environment. So let's from here take a look, where did the markets close for the week? Here we are, a daily price chart of the S&P 500, and you can see that this gap up in response to the lower than anticipated inflation data did continue as the markets progressed. And this uptrend that has been shaping up here over the last 2+ weeks remains very firmly in place. We have the stochastics up here in positive territory, likewise with this relative strength RSI indicator, both momentum indicators. And then we did experience nice high volume on the advance this week, indicating accumulation, so that is good news. Moving on to the sectors, the 11 sectors in the broader markets, we're looking at a 2-month daily price chart view, and it is strength to weakness as far as the display here. Now, technology was not a top performer last week. It was a big performer last week, up 4.5%, but it remains up here at the forefront, and we can see this RSI is putting the group into a bit of an overbought position above 70. So we want to see this group essentially digest the significant move that it had the prior week. Moving through some of these other areas, newer to this forefront is the financial sector. And take a look, sharp advance. We're seeing nice numbers in some of these bank names, and then also a lowering of interest rates is good for these banks because it does provide a backdrop for increased lending activity, which will help their bottom line. And then as we move through, we can take a look at some of these other areas that are coming into their own. Industrials certainly up here, this downtrend being reversed, gap up in line with the markets, and a nice continuation rally. A number of transportation related stocks are on the move higher, airlines, trucking, rail, and otherwise, and that's good news certainly. Also, as we move through, you want to be aware of other areas that are really coming in again onto their own, and that would be consumer discretionary. This is XLY. We had a number big box stores report their earnings last week, and that was certainly mostly good news. But we'll take a look at some other areas in that discretionary space that are also on the move higher. This group did outperform last week. The best performing group last week was REIT stocks, XLRE, up 4.5%. Of note is the fact that it also was the most heavily shorted sector going into this week. So we did see some underlying short covering, not just in the real estate sector, but otherwise other areas as well. So let's move on, and I'm going to share with you some underlying industry groups that take us beyond those sectors. So again, you can be really in front of where the relative strength is so that you can participate in that. First up here, again, strength to weakness. I'm using relevant ETFs here. And SOXX and semiconductor stocks up 4% last week. Now, this is ahead of next week's very impactful earnings result from NVIDIA that are due out. So we'll see if that helps propel the group higher or not. But essentially, this new uptrend is still, certainly by way of the MACD, in the beginning stages of this uptrend. We can also take a look at another technology area, and that is software. Now, software stocks performed in line with the markets, but certainly a nice confirmed uptrend. We did get a base breakout on that gap up. I'm using IGV, a widely watched software ETF. And then moving through, looking at some of these other underlying industry groups, I want to share with you areas that are newer to having and experiencing relative outperformance. First up here is KRE, that is that regional banking ETF. You can see this nice upside momentum here in the RSI and the MACD, and the group did, using KRE, break above that 200-day simple moving average. Some interesting candidates there as well. Also reversing its downtrend here are actually in the beginning stages, are small cap stocks, IWM. You can see they've had a tough period overall this year, quite a bit by way of volatility. But last week, the group rallied 5.3%, and a lot of your bigger movers within the markets were in this group. We do have positive MACD and a positive RSI among these small caps as well. One other industry group, actually two. First up here is IHI. This is the medical devices ETF. You can see this nice double bottom formation as this group continues to reverse this very lengthy downtrend. Last up, we can take a look at XRT, and that is the S&P Retail ETF. And you can see that this too has reversed its downtrend, closed above this 200-day simple moving average with an RSI and a MACD that is in positive territory. From here, I am going to share with you a preset screen on stockcharts.com, and I'm sure many trading platforms will present this to you, and that is this market movers screen. Quite simply, it's showing, in this case, the top 10 best performers on a given day in the S&P 500, and from here, I will share with you a view of this top performing area going back till Tuesday of last week. And what I did want to share with you is how these downtrend reversals have historically been the top performers. However, you do need to make sure that that underlying chart is positive. So let's take a look at a name that hit the screen the prior week to give you an idea of what you can eventually potentially experience. This is Expedia, EXPA. First up, you want that gap up or that reversal to take place on earnings. In this case, very strong earnings. What shapes up since then is this MACD crossover, black line up through the red, enters into positive territory, and then likewise that RSI moves above 50 and into positive territory for a nice continuation rally. So last week we did see similar price action here with Target. However, you want to note note that this 200-day simple moving average is downward trending and your next potential area of upside resistance. However, we do have a positive MACD, a positive RSI, but we are in an overbought position. So for me, this would not be an ideal candidate. Instead, we can move on and take a look at a company such as Ulta Beauty. This stock is reversing its downtrend. This potential resistance is a bit further away, so we do have a possibility of further upside before hitting resistance. You can see the MACD entering into positive territory and the RSI trending upward as well. From here, we can take a look at those top 10 movers today, and I'll share with you one of the top potential candidates as we look at Ross Stores. Again, it was earnings driven, this gap up that took place today. Nice high volume here. We have a positive RSI and a positive MACD, and this gap up did result in a continuation of that base breakout. We can also see that Expedia hit the list again later on in the week, and that, of course, ideally is what you want to see, is that stock continuing to hit the new top performers list as it continues into an uptrend. That's it for this week. Everyone have a fantastic weekend, a great holiday next week, and I will see you here again in 2 weeks. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.